We're going to talk about pricing and discounts.
Let's talk about, when was the last time you raised any of your rates? Love to hear from you, because this was some of the best advice I got as a new pet business owner going to association meetings, which was a long time ago. It's actually where Robin and I first met. But one of the board members there and veteran owners said, you should raise at least one rate in your business every year. And you know what? I started doing that, and I kept a spreadsheet, of course, because I'm a little spreadsheet geek. My different services, and when I just had last raised rates, and I would just go through and make sure every year I was raising some rates. And it makes a big difference to your financials, but it also takes a lot of that angst out. If you wait 3-4 years and then want to do a rate increase, Robin, we've talked to people, they agonize over it, and it becomes such an ordeal. But if you just know some rate in your business is going up every year, you train your clients to that fact, it takes that stress and agony away. That's my tip.
I love that idea of not necessarily raising every single rate, because it does help to ease the pain, so to speak, of, I think, really the owner, because I think we are the ones that freak out the most. I don't think your clients mostly care, but I'm going to come back to that in a second, because I am going to say that there's several people who just raised their rates, which is awesome. So Stephanie's just said she raised her prices January 1st for everything, daycare, boarding, grooming, and training, which is awesome. Great job, Stephanie. And Jen also said raised her rates yesterday. I should say that it is the beginning of the new year. If you're watching this replay like 6 months from now, the new year typically is an area where people do raise rates. I will tell you that a couple of our clients actually do peak season pricing. So because of the holidays, because we just came off of Christmas, what she typically does is she raises her rates for peak seasons and then doesn't lower them again, which I thought that was an interesting thing, an interesting way to go about raising rates. So she raises her rates anyway at the end of the year because of the holidays, but then those become her new rates going into the new year, which I think is an interesting way of doing it as well. I also think that when you do raise your rates, I have to go back to this comment for a second. Shane said we raised our rates after the first lockdown. We actually had time to figure out our numbers. That's a really good figure. And knowing your numbers is what we're going to talk about in a second, because where do you raise your rates? Like at what point is too high or what point is too low? I mean, we're going to get to talk about that in a second. But when you do raise your rates, I will tell you, my accountant told me years ago that if I raise my rates and nobody complained about them, I didn't raise them high enough. And I can't even tell you a time that I raised rates where I got a lot of complaints. Most of the time I raised rates and usually nobody even said anything. And then I'd be like, darn, I didn't raise them high enough. And occasionally I would get 1 or 2 people that said, oh, I can't believe you're raising your rates. I never had anybody leave because of it. I had occasionally, like I said, people would be grumbling about it, but usually they didn't leave. But again, I think it's a good rule of thumb. If you really do lose clients, then probably you're doing a good thing. And the other issue I like to look at is when you're going through your numbers and figuring out your numbers, because that's the fear everyone has. Oh, we're going to lose clients. We're not going to have as much money. Let's say you raise your rate 10% and you lose 5% of your clients. You still are making more money. So I always tell people, when you're factoring in what your price increase might look like, then do a little scenario to say, what if these prices really are too high and I make my clients mad? How many of your clients, let's say, do in a scenario where you lose 10% of your clients, which is not probably going to happen, but do those scenarios, because you'll probably find that even if you lose several clients, you're still going to make more money with fewer dogs. So I think that's important to realize too. But I do think raising rates is partly a mindset thing. So I'll let you talk a little bit to the mindset part of it, Susan.
Yeah, it is a mindset thing. You're there to serve, and you get into your head that the clients can't afford it. And as Robin said, they're going to leave, but let them make the choice about their budget. You can definitely give them notice, but for your business, and I wouldn't be saying this if I felt like the people we work with are making lots of money and very happy with the profits and their own pay. But what we hear time and time again is pet business owners are not happy with their own pay. Some of them are not taking home paychecks. And the thing about raising your rates is that is your paycheck. If you really think about it, your costs don't go up. And so when you raise your rates, that's more money for you and to pay yourself. And if you don't pay yourself, your business will not be there long term. So if you really want to serve your community, you need to know your pricing and set your business up to be sustainable and there long term for your community.
Yeah, and I think we're so in this industry, we are so good at looking after the pets and our employees, and everybody gets paid before we often pay ourselves. And the reason that we often don't pay ourselves for the people that Susan and I have worked with, when that pet care facility owner isn't getting paid, it's usually because they aren't priced. And so it really is, but you're not going to not pay your employees. Like we've never had a daycare that said, "Oh, I'm getting paid, my employees aren't. What's the problem?" Nobody ever asks that because we all pay our employees. But then we wonder like why we're burnt out and why we aren't making enough money. And it's because you haven't priced yourself the right way to actually make enough money to pay yourselves. And so we would say going into how to price your services, that should be the goal. The goal is you're not trying to rip people off. You're not trying to charge an arm and a leg. You simply want to make sure that you're covering all your expenses and then you're making a profit. That profit essentially becomes your paycheck. And if you don't go through that scenario the right way, then you aren't going to have enough money. And again, as Susan said, this is really common in our industry. So we really like to help people figure this out. So really, it doesn't matter when you raise your prices. I do find that we in our industry, we do have a lot of people that do it in January. It's a natural break and kind of a natural time to reset. But the summer is a great time too, going into the summer where you're actually going to start increasing typically your services, especially lodging. And especially if we don't have COVID around, doing it in the summer, like right before the summer, is actually good too. So it's really up to you.
I played around with different time periods in my business. I did increasing them right before summer for lodging. And then I also sometimes increased right after Labor Day because volume fell off and my business had less money. So if I increased like daycare rates, then I got the revenue hit, didn't feel as big. But I think the key thing is to just make it an annual part of analyzing your business.
Let's just go to understanding how to actually price your services. And we're going to get into a lot more detail on this, or we can get into a lot more detail in this in other areas, but we're going to keep it simple for this Facebook Live. Really, the thing that you're looking at is what are your expenses, add profit to that, and that's how much you should price your services at. That's the basic simple formula is your cost plus your profit equals your price of that service. So this requires a few things. Number one is you have to know your cost based on a particular service. So if you're going to price your daycare services, you want to separate out what is your cost to operate your daycare. If you're going to price your training services, what are your costs to operate training services? If you're going to do it for pet sitting, what are your costs to do a pet sit or an overnight or whatever it is? So for each of those areas, you have to break those costs down. And most of our folks that we work with, they can usually do a back of the napkin exercise to help understand that. Because usually you're figuring out, like for training, it's like, how much am I paying the trainer? How much am I paying for treats or a clicker or whatever? If you're doing pet sitting, it's how much is the gas or how much is the travel time, depending on how you calculate that. And then how much am I paying the pet sitter? If you're doing daycare, how many daycare staff do you have and how much are you paying them? But then here's where the sticky wicket is that most of us, and I'm going to kick this back over to Susan. The sticky wicket is we figure out the cost and then we factor everything based on just the actual cost of what that particular service is. And we totally forget about the fixed cost of our building or facility or car or whatever. So you have to factor in some of your fixed costs. So I'll kick that over to Susan so you can talk a little bit more about that.
You got to think about how much expenses do you have before a pet even walks in the door or you take care of a pet if you go and do on-site. So you have marketing costs, you have insurance, a lot of you have rent, you have general supplies, you may even have staff that answer the phone for you. all of those costs have to get covered also. And so we call those the fixed costs that need to get covered. And we have a template that we use with a lot of our clients. And surprisingly, we find that those fixed costs for businesses often can be anywhere from $8 to $15 per dog, which would mean the first $8 of any service that, let's say you charge $30 for daycare, the first $8 of that is going to pay for the fixed costs for that dog. Now you've got 22 left to pay for the staff for the full day, the supplies, the merchant fees, and stuff like that. And so if you feel like you're always not quite catching up, it may be that your fixed costs aren't being included in when you're setting your rates. And the fixed costs will be divided across all your different services, but it is really important that you know what those are. So you can look at your profit and loss statement, those total operating costs, and just divide it by the number of dogs that come, and then take your total revenue, divide by the number of dogs, and compare those two numbers. And if they're too close together, you're probably not making a profit.
And that's the biggest area that we see, that people calculate their pricing based on just those actual expenses at the time of the service. And then they find when they get to the end of the month, they're like, why do I not have enough money? Because there's a certain amount of expenses of those fixed costs. And we often talk about fixed costs, or that's what you're paying whether you have a dog in your care or not. So those are those fixed costs. That's why they're fixed. Those are things you're paying: the lights, the electricity, the cleaning agents, whatever, the lease or the mortgage or your car. Those are things you're paying whether or not any dogs show up for your care. But most of the time, what we find is that people don't calculate those into their pricing, which basically means you're covering all of your variable costs, but you still haven't paid the rent or the utilities. And so obviously those have to get paid. And then now you find that maybe your paycheck's a little smaller than you thought it would be. So if you factor that in, and as a general rule of thumb, just plug in an extra $10, because on average we do see that. But it is better to do this specifically for your facility, because it's going to vary based on your size and all of your costs for your facility. But if nothing else, just make sure you're factoring in an extra $10 to cover those when you're figuring out those expenses. And then once you have that, you're going to figure out a profit. What should your profit margin be? That a little bit of that depends on the service. We would aim for a minimum of 20%, but really it should be even higher. If you're doing something like daycare where it's very staff heavy, it might be 20, 30%. If you're doing something like dog training, especially private lessons, that it might be as high as 60 to 70%. But you definitely want to have that profit built in, because that profit is really what you're going to end up paying yourself from. So that becomes your paycheck.
And I know some people may have gasped thinking about making a 50, 60% profit on a service, but the value's there. And I think that's an exercise, that's part of pricing. If you research how do you price, you look at cost plus profit, which is what we've been talking about, but then you also look at value. What is the value that you're providing to your client or customer? And I can tell you, private dog training, usually when people need that help, they may be a little bit desperate to get a solution to help the family. And you've invested a lot in yourself and your skills and your schooling and education. It's okay to make a 60% profit on providing those services. And a lot of times we don't value what we're providing. Keeping a dog and a family happy and together is truly priceless.
So the starting point is you have to get those numbers out, figure out your numbers, figure out what you actually need to make bare minimum just to cover your costs, factor in a profit, and that includes your fixed costs too. Factor in a profit, and then now you have whatever you should price your services at. So then we do get to the point where people then say, oh, maybe that's higher than the facility down the street. We find that most people tend to do pricing this way. They call or go on the website and look at like the 5 other locations closest to them, and then they price themselves in the middle of that because they don't want to be too high and they don't want to be too low. It's good to know your competitor's pricing. Let's not kid ourselves.
That's the third input to once you cost plus profit and value. You do want to know what competitors are charging, but
So
There's
you
a
definitely want to know that, but that should not be your baseline, because how many of you even know if their services are the same as yours? Like, they might be offering a totally different version of whatever the service. Daycare is a perfect example. So daycare versus all day play versus an enrichment daycare. If you're both using the terms daycare, but one of you is doing enrichment and the other is doing day long play, totally not comparing apples to oranges. Those are totally two different services. How is their customer service? You might do a way better job of customer service. You might do a way better job of education. Like, you might be doing a much better quality of care for those dogs. So that's one thing. The other thing is, you have no idea if they're making money. Susan and I can usually look at pet websites and look at their pricing and say they're not making money. They're going to be out of business or burnt out in a few years. So you don't even know if they're making money. Just because they happen to be operating at some level of pricing doesn't mean that's affordable or cost effective. So you really have to be careful about that too. But that does come down to the third point, which is, if you find that your pricing is significantly higher, doesn't mean you lower your prices. It means you go find a marketing expert who can help you market the value of what you're offering. And that's like a whole nother Facebook Live we'll have to do on that. But because it does come down to how you're marketing and selling your service. It doesn't mean, oh, because they're $20 less, I should lower my prices to $20. No,
Okay.
it means you have to convince the people who are your clients or prospective clients why the value is there. And I can tell you it is. We've seen daycares all over the country that are operating in the $40 to $100 range for daycare. And some of them are in rural areas. So this isn't necessarily even all geography. I do think geography comes into play, but we've seen really successful daycares in areas where you would think there's no way they're going to get this much. And they do, because they're marketing and selling it in a way that is effective, which is a whole other category of learning and education. I'll go back to Heather's question. Do you announce this to your customers? Do you want to take that one, Susan?
I think that kind of comes to you and your brand and what you're doing. I always did, because I just felt better about it. A lot of services that you participate in do not. When you go to a doctor or haircut or massage or whatever, they don't necessarily announce to you that rates have went up. But I always did. And I would often give like a 30-day notice. And if we had daycare packages, that gave them, time to buy another package under the old rates. And that was the way I felt good about doing business, but I didn't make a big deal out of it. We just posted, these are going to be the rates effective this date. And that was about it. I think the less big deal you make about it, the better.
Yeah, we used to just announce it usually via email with our like monthly newsletter. It wasn't like a special communication. It was just something that went out monthly anyway. And we usually only told them 2 to 3 weeks in advance. It wasn't like we did a whole big blast about it. But I have also seen individuals that obviously your current clients are the only ones that this matters to. Like, your potential clients, and I wouldn't put anything on my website that says coming soon, new prices. I would just change the prices on my website. And then when the prices are changed, that's the new price. And then people that are current, your members, those are the only really ones that you're talking about. And so I like the idea of letting them know, but I wouldn't make a big deal about it either.
Now, I have worked with some clients that do pretty big rate adjustments because they are underpriced and decide to bite the bullet and just do it. And I'm talking maybe $5 or $10 for a service going up. And sometimes then they explain a little bit as to why, that they highlight the value of the service, the training of the staff. With COVID, a lot of you are doing extra sanitation and health protocols that cost more money. If you're doing a really big jump, you might want to put in just a little bit about the value and why, but I don't think for the most part, small increases, that's necessary.
Yeah, and then that kind of it's a good segue to go to what BJ just mentioned, which is do a lot of things at once, increase rates, memberships, quantity discounts. We're going to talk about discounts in a minute. But if you are rolling out a new program, like a membership program, like BJ mentioned, or you're going to significantly change something about the way you're doing your current service, and daycare is a really good example. We had tons of people during COVID that said, now is the time, I'm going to do daycare 2.0. And they rolled out a completely new daycare when the lockdowns ended that was enrichment based. So if you're going to do something like that's a great time to increase rates. And it's a lot easier to increase rates a significant amount, like Susan's talking about, because you're pairing that with the fact that this is a whole new program, a whole new activity, totally new benefits. So same thing if you roll out some kind of a membership program. So this is a great opportunity to increase that service in a different way. So that's a really good point. If you're going to do something really expensively high, like you really are like, I'm changing my rates a lot. If you can pair it with some type of new service rollout, it makes the whole discussion a lot easier, because then it's not just about money. It's about, we're significantly changing what we're doing with your dogs. Even just simply saying we're going to increase the rates because we're going to do more one-on-one care, or we're going to do smaller groups, which requires heavier staffing, like anything like that can help to explain to the pet parents why it's important. And then really focusing on the education that you do, any kind of training that you do with your teams, like all of that costs money, but it's vital to providing quality care. So making sure your clients know, because that usually will set you apart from other daycares or other boarding facilities that aren't doing that kind of stuff. And I will tell you, the people that are just price shopping, that are going to go to your competitors, those probably aren't the clients you want anyway. Let the people go. You're not out there to serve every single client in your area. You're out to serve the specific clients that understand the value you're providing to their pets and are willing to pay for it.
If you want help, I really do like our Pet Profits tool, which is $39.95 in our store. And there's a PDF that'll walk you through, and there's an Excel spreadsheet that will help you put your fixed cost in and your variable costs for your services. And that's what's important to know. Like Robin said at the beginning, you have all these sales, but how much is coming from each service? And then figure out the costs that are directly related to that, labor and supplies, but there's all these fixed costs. So what I do with people is I just pull your P&L for 2020 and go through and look at your expenses and say, is this a cost that's directly related to one of my services, or is this a cost I have to pay regardless of how many pets come in the door? And if that is what it is, mark it with an F for fixed, and then mark the others for variable for the different services. And that's the best way. Cost plus profit is the best way to do pricing for your business.
It's a PDF and then several Excel spreadsheets, but the PDF walks you through how to do all of the calculations. And we do understand that it is often not the fun part about operating your pet care business. So a lot of people put it off, but the new year is one of the best times to do this. And you can really take last year's data, or maybe even 2019's data, if you feel like 2020 was a total wash because of COVID. But whatever data you use, it's a starting point. If you have no data, you can start start tracking over all of these categories over the next couple of weeks, and week by week, you'll start to gain this information. And then you'll know in a quarter, is this helping me or not? Is this helping me to make a profit or not? So it's a really good tool to use.
Yeah, if you just want to do it at a very high level, how many pets did you serve in a period? And then get the revenue for that period and the expenses for that period, and divide both of them by the number of pets, and you'll know your revenue per pet and your expense per pet. And hopefully revenue's higher by, like Robin said, 10 to 20% or more. And if it's not, then I would delve in and look at each service and try to figure out what your profit and cost are by service.
So BJ said existing customer rate protection, new rates for new customers, marketed as a discount. So this is a really good topic. We always get asked this question, but I have this one client that I love and I don't want to increase the rates for them or whatever. We say, generally speaking, I would make all the rates across the board. But the fact of the matter is there are certain clients that for whatever reason are in that special category of you just want to do something special for them. I would just try not to have that be all of your clients. So I would not recommend doing a price increase where all of your current clients stay at one price and everybody coming in gets to a new price. I tell you, we've seen that happen. It works for about 3 months, and then you are so inundated with who the heck is paying what price, and it becomes a logistics nightmare for your team. So just that part of it makes it hard. But I will say that I always had a couple clients that were special for whatever reason, and I had 2 or 3 that I usually did something special for them where they didn't necessarily get the same rate increase. Those were done by exception and just a private conversation with those people. So you might have something like that, but I would try to raise the prices for everybody.
I think it gets really hard. And if you're needing to raise prices because your costs are going up, how long are you going to keep them frozen at that old rate? You guys know you're going to have these clients for the life of their pets, and often second, third generation. So you've got to think about that long-term impact of freezing them where they are, because your costs are going to continue to go up. So basically what you're saying is, I am going to take money out of my pocket and give to you because I am very nice. And if you feel good and that's good for you, you can, but I would look at the long-term impact of doing that.
Yeah, I literally had a conversation with one of our potential vendors or clients that works with us, where I had that exact same conversation with him. He wanted something. I told him the price. He wanted it lower. And I said, if I do that, I will basically be paying you to use my services. That was exactly what I said to him. And when I said it, he did not get offended. He was sort of shocked because I just don't think he was hearing me up until then. So not that you have to be that blunt with everybody, but you have to know yourself because I knew that. I knew based on the price he wanted, I knew what my costs were. I didn't tell him what my costs were, but I knew what they were. And I was like, there is no way that's not even a negotiable starting point. So you definitely have to have the knowledge yourself before you can even enter into those conversations, though. And you definitely need to know, if you're going to make those exceptions, what it's doing to your bottom line. And Susan and I say all the time, we don't care how you spend your money or what you do. Where we step in and say we disagree is if you come to us and you say, I'm giving away all this stuff because I love these people or services or groups or whatever, but you're also unhappy because you're not making money. That's when we say, you have a couple choices. You can raise your prices or you can keep giving away the farm. But the bottom line is, your clients want you to stay in business. And Susan and I want you to stay in business because, believe us, we both know the quality of care that's out there. And it ranges from really horrendously crappy, like dogs getting killed, to really amazing. Like, I would fly to that place with my own dog and put my dog there because I think you would have so much fun. There's great variety, and we want the really good facilities to stay in business. But you're not going to stay in business if you're not making money, because you're going to burn out and because you're not going to have enough money to pay your own expenses. So we want you to succeed in that sense. And
another thing,
take care of the dogs.
And Robin, we've had several people come to us that they operated for a long time with very little profit, and then they start thinking about retirement.
Right.
And they realize they have not built retirement for themselves. And as a small business owner, yeah, the sale of your business could be your retirement, but how much value is there? And I can tell you, a business that's making a profit of less than 20% is not as valuable as one that's making more. And so you're shooting your retirement as well when you don't price right now.
Yeah, and as we often hear, you're going to exit your business at some time, whether it's because you did it intentionally or because something happened and you have a reason that you need to exit. But you want it to be valuable when you exit, and it's just not if it doesn't have a profit percentage built in there. You may be willing to live on a lot less, but whoever's going to buy your business won't necessarily have the same point of that.
Yeah, so they may not want to give those clients their pay instead of themselves. So you've got to think about, if you are building value in your business for your exit strategy, you need to make decisions for your business to maximize that value.
So Jen said, you're so fantastic. Thank you so much, Jen. We love being on Facebook Live, so it's fun to talk to everybody. We are going to go to discounts, because discounts is the other way that you can make an immediate improvement to your bottom line without changing anything. Like, you're not changing your operations, you're not adding services, you're not changing your staffing. It's one of the simplest ways to affect an increase in your paycheck immediately. And that is by looking at your discount. So I'll kick that over to you, Susan, if you want to talk a little bit about that.
Yes. My number one thing is for every discount you offer in your business that you are able to write down and explain to Robin and I, if we were there across the desk from you, what is the value to your business of providing that discount? Not to the client, to your business. Does it make sense for your business to offer that discount? And I can tell you for a lot of discounts, you'll have a hard time answering that question to our satisfaction, especially when we first started doing financial surveys of this industry. I was shocked at the high level of discounts people were giving, like 50 to 60% for second and third pets. That's crazy. Those pets also take your time and energy, and especially in daycare. Each dog in daycare is taking up a spot you could get full price. So this is one place we have seen great progress in our industry. People are reducing the amount of discounts, because if you're trying to pay your team, and oftentimes we know payroll is 30, 40, 50% of revenue. There goes your payroll. Then we have these other fixed costs. If you're giving 50% discount off, you're cutting into, as Robin say, almost you're now paying to take care of their dog, if you would look at that, the numbers. So we really think your discounts need to have a business purpose, and it's okay to have demographic discounts, like for seniors, military, first responders. I think that is up to you and your brand, but they should probably be 20% max, maybe even just 10%. Multiple pet discounts. Again, I don't think it's your responsibility that people decide to have multiple pets. I can tell you, when I had 3 dogs, I didn't get discounts going to the veterinarian just because I had 3 dogs. It's a mindset issue, again, that we have in this industry. People need to budget, and will budget for what they have as far as care for each of their dogs. And you've got to make sure you're making a profit. And it is a great way that you can reduce discounts instead of raising rates and benefit the same way.
So Cara said, we stopped all discounts this year. Way to go, Cara. That's a huge step. And then she adds, it was so hard for me. And I do think it's hard. In our industry, we are so giving and nurturing and loving. But I made airline, not for a while, but I made airline reservations for my kids before. I don't get a half price ticket on the second kid, flying them out to me for Christmas, which didn't happen this year, obviously, because of COVID. But it's the same principle. Nobody forced me to have 2 kids. I don't get discounts on them. So
yeah, when you go to the dentist, do the dentist give you half off the cleaning?
Either. So we're not going to tell you not to discount at all. There may be very valid reasons that you have a particular rescue group you want to discount, or military you want to discount, or police and firefighters, first responders, whatever. We would just say, look at all of your discounts together should be adding up to less than 10% or less of your revenue. Should be cutting into 10% of your or less of your revenue, because that is money directly out of your bottom line. And so if you don't do this, I would definitely start to track how much are you giving away in discounts. If you don't have a line in your budget where you can track that, start tracking it. Even if you just track it on a spreadsheet, like you say, these 3 dogs came in, and so we disc them $20 a day. Write it down. You'll be shocked. I can guarantee you'll be shocked at the end of the month and at the end of a year to see how much you actually gave away. And even if you just said, okay, I'm not going to get crazy, I'm just going to say, let's cut our discounts by half, or maybe even by 5%, you'll see how much that money comes back to you. And as soon as you have the real numbers, I can tell you, as soon as you see the real numbers, you'll get really quickly engaged in wanting to reduce your discounts, because oftentimes it's a lot of money. It's thousands of dollars usually.
And there's some hidden discounts in your business. Daycare packages are a discount because you're not getting your full published rate. And I know people give discounts sometimes for boarding stays over 10 days or 2 weeks. That's a discount. So there's a lot of hidden discounts sometimes. So look at all of those. And this is a great exercise. If you've never done it, go through and start with your published rates and think about all the ways that you're giving money off of that published rate. In fact, probably most people rarely get the
Yeah,
published
I was gonna
rate.
say, we almost never see people that get their published rate because they have the published rate to make all their discounts look cheap. Like, I mean, make all their
Yeah.
packages look better. And so then they're discounting so much in those packages, you almost never see anybody get their published rate. And
But
again,
if
it's not necessarily a problem, but if that ends up more than 10% of your revenue, it's a problem for your business.
and if you have packages, you need to have expiration dates on them. Because the other thing is those are liability to those clients forever. And Robin and I have talked about this before. If you go to sell your business and you've been paid for packages, the buyer of your business gets all that money that hasn't been used.
Yeah.
And that can be a huge liability. So just in some POS systems, run a report. What is your unused package value? If you had to come up with that money and give it to someone today, do you have it?
Yeah. And that the other reason for putting an expiration date is if you go back to what is the point of the discount? If you're going to sell a package and because you're giving a quality volume discount, that's basically what that is. The whole point of that is not just to be nice to your clients. That's really nice that you are being nice to your clients. That is not the main goal of a package. So the package should also be helping your business get those clients to come back regularly. So if you have a 20-day package and it expires in a month, that's doing that. They're trying to use those 20 days. You're trying to get that client into your office or facility 20 days out of a month. Totally valid. But I would still have that discount be less than 10%. But if your packages are 6 months expiration dates, that's not helping you at all. That person can string out that 6-month packet. It's actually hurting your cash flow because now they've paid for something and they might not actually use it for 6 more months. So you're not getting any more money from them from a cash flow standpoint for 6 more months. So it just doesn't make sense but that was how we all did it for many years. But like Susan said, we are starting to see some of that change, which is nice. What about memberships and founding member prices? Do you raise those at some point too? What if that's the carrot to get them sign up? So this is a great one. That's a really good question. We often do tell people to offer like a founding rate or an introductory price when you are first launching something, whether it's your just first opening or maybe you're launching a new service. We do this all the time at the Dog Gurus. We say, hey, it's an introductory special on this product, but there's a known, that also tells you there's a known factor that this price is going to go up. So even if you bring someone in at a founding level, I would have a date as to when that price might go up. The only time I might consider changing this would be if you have a recurring membership subscription. If it's a recurring membership and they sign up as a founding member and they're paying you monthly, then those people I probably wouldn't ever change. But if it's something like a daycare service or a boarding service or lodging or something like that, then I would tell them that price that they're getting has a timeline on it or an expiration date on it.
Yeah, you have to look at what is your cost related to providing the service. And so if what they're paying isn't covering your cost, at some point you do need to increase it. So it can vary a little bit based on what that is, because we do have founding members that joined us at $15 for our library membership that are still paying that, and we never increased them. But we knew the incremental cost, that was okay. And there's not that many of them, but we do love them. So I understand. That's a good question.
Yeah. And that's a monthly subscription they're paying. So if you start a monthly membership, I would definitely consider doing an annual cost. But for that, like Susan said, you do have to make sure you're covering your costs over time if they're there, and which probably they will, unless they're into like the 3rd year or 4th year, then you really have to make sure that you're still covering your costs. But the other side of that, if they've been coming regularly for every month for 3 years, there's something to be said for that too. The lifetime value of that client has gone up as well. But that's a really good question. And how long is reasonable before having the packages expire?
It really depends on how many passes are in it. So I loved Robin's example of a 20-day pass. I would expire in 30 days. People that I think they have too many options for their passes. I would say, depending on the service, how often do you want them to come in to be worthy of getting that discount? So a 10-day pass may only be good for if you think I'm giving a 10-day pass so people come twice a week, then 30 days. But if you want it because you want them to come every day, it may need to expire in 2 weeks. I think you've got to look at why you're offering that package. And I've worked a lot with people on their packages, and I'll say, okay, which ones are your most popular? Do you sell the most? And it's amazing how you may have all these options, but you really only sell two of them very most frequently. I would work with those two and drop the others.
Yeah, we often talk about how many options you have, and this is true for everybody. We had a marketer tell us a long time ago, a confused mind always says no, which means if you're someone's on your website trying to figure out which package they want and there's so many packages it's overwhelming, they won't even make a decision. They'll just be like, I can't figure that out. So it's actually best to have no more than 3 typically. But like Susan said, if you do the calculations and you're like, of all of these packages we have, people really only buy these 2, just get rid of all the other ones and use those 2. That's not to say if somebody wants something really valuable to them, that's not to say you can't create something special just for a client who comes in and is like, oh, my package is much more extensive. I want all this stuff. I might consider doing something specific for that one person. But in terms of the packages you promote, I would reduce them. Stephanie said, I really want to have peak season pricing for boarding, but so afraid I'll price myself out of the market, being I'm already highest in the area.
Yeah, I understand that. It took me a long time before I started doing peak rates at holidays. The reason it works is because the demand is so much higher. And so your existing clients are not going to want to go anywhere else. And I just say try it. And for a lot of people, peak rates are often maybe $2 more, $2 to $5 more per night during the peak rate season. And just try it, because if you find that you're not bored getting full, you can always roll it back.
Yeah, and the other thing is this goes to any time you have a wait list, that's a perfect time to look at increasing pricing somehow. Like sometimes people will call us and they'll go, I have this really big wait list and I don't know, I can't raise my prices. And to me, that's a totally good time to raise your prices, because you may lose some clients, but you're going to open up those spots to this wait list. So you're really going to not lose anybody in terms of quantity of clients, number of clients. So that's a really good time to look at when you have a wait list. Are you priced? Because it's a really good opportunity to raise prices if you're running a wait list on any one of your services. Again, going back to the very beginning where we said you don't have to raise prices on every single service all at once. If you find you have a wait list on lodging, or peak season lodging is a good example as well, or your daycare's filling up, or your grooming, but you have a wait list for months, look at increasing pricing.
As far as membership programs, Daycare 2.0, a lot of our clients that implemented that had a limited number of spots available for dogs to get into that program. So to guarantee your spot, you paid a membership to make sure you had access. So the membership fee is on top of the service fee. When I had my business, we did have a membership that I put in a few benefits that related to services, like they got 10% off their baths or grooms. I waived late pickup fees. I didn't really have cost related to late pickups. I just wanted to discourage it from most of my clients, so it became a perk of being a member.
We've seen some people that include a certain activity every month, or maybe a free Kong, or some kind of extra special treat, or maybe they get turn down service or whatever for a certain number of days whenever they're coming. Doesn't necessarily have to be every time they show up. We've also seen memberships that include priority reservations. So again, this is one where people are like, I can't guarantee everybody reservations, because what if everybody takes me up on it? So it's usually not everybody, no matter when they contact you. It's usually priority reservations up to a certain date. So basically those members have the first opportunity, usually over peak season, to guarantee their spot. But then you are going to put a deadline to say, if you haven't told us by this date, we can't guarantee you, but you have a chance to book before you're technically open for bookings for those holidays or those peak seasons. We've seen people do memberships with activities. Trick of the Month is a really good example. So Trick of the Month is a membership that we would recommend people offer who can, when a dog comes to daycare, they can pay an extra service, an extra fee on a monthly basis for their dog to learn a specific trick. And trick of the month is a great thing because the dog has to come several times in order for you to teach the dog. So they're bringing the dog into daycare. And then on top of that, you're getting some additional revenue to teach the dog how to do a specific trick. And then you bring the dog out one evening when the owner picks it up and you show them how to do that trick and everybody's happy. So we actually have a program that we developed with Blue Nine Pet Products. For a single fee, you can purchase 15 different tricks and all the training material to teach your staff how to teach those tricks, all the social media graphics to promote it. And then you can roll that out to your clients as well. So that's another really good type of membership that you could offer. And you could do that with enrichment. If you're doing dog walking, you could do that as an extra service when you're doing dog walks. So anything that you can do on a recurring basis. This past year, we saw people roll out Kong Club memberships where they would put together Kongs, and then on a weekly or monthly basis, the owner could bring they would fill Kongs with stuffed food. And then on a monthly or weekly basis, the owner could bring the used up Kongs and they would get 3 or 4 new ones, depending on whatever the fee was. I would totally pay for that. I need someone in my area to do that because I don't have time to fill all the Kongs I need to use all the time. But anyway, it can be a whole wide variety of stuff.